One of the sweetest things you could enjoy as a stock investor is dividends. Imagine you could receive a steady supply of cash regardless of whether the stock market is rising or falling. Well, you can stop imagining because in this video, you'll learn the best dividend stocks out there and how to make money from them. To make things even better, these stocks pay out monthly dividends, unlike most dividend stocks which only pay investors yearly or quarterly. So ensure you stay till the end of this video to learn about these investments and how you will make at least $2,500 monthly from them. The stock market is one of the easiest and most profitable ways to make passive income. It's how billionaires like Warren Buffett accumulate their multi-billion-dollar wealth. But there are many variables in the world of stock investing, and one of those variables is dividends. You see, dividends are a percentage of profits that companies give out to its shareholders. When you buy stocks, you're typically buying a small percentage of the company. In other words, you're now one of the owners of the company. As an owner, you're entitled to profits, right? Well, not really. When it comes to stocks, most companies simply reinvest their profits to grow the business. As the business grows, so too does the value of an individual stock. When these stocks reach high value prices, individual stock owners, in this case you, can sell their stocks and make a profit. That's how the stock market works in most cases. But then, some companies don't reinvest all their profits. Rather, they share it among various people who own stocks in the company. These profits are known as dividends. The profit sharing can be done annually, biannually, or quarterly. The sweet thing about dividends is that investors enjoy cash rewards while still having the option to sell their stocks and make even more gains. Sadly, not many companies offer dividends, and even the ones that do usually settle for annual returns. This is why monthly dividend stocks are a real game changer. It helps with better financial planning and budgeting and keeps your content as an investor. It's just the same way as company workers would prefer monthly salaries to annual salaries. Monthly returns from dividend investing can be used to meet your monthly expenses or even can be reinvested to generate more income streams. Dividend investing isn't difficult. However, there are certain things that you must take note of before putting your money into any dividend stocks. First, you should pay attention to the dividend yield. This refers to the amount of money the stock can yield as profits annually. A small dividend yield would, of course, mean small returns. The next thing you should consider regarding dividend investing is how stable a company is. You don't want to invest in a company that ends up going bankrupt. This is why you should ensure the company you have in mind is experiencing a steady cash flow and a good business foundation. As Warren Buffett would say, it's far better to buy a wonderful company at a fair price than to buy a fair company at a wonderful price. Lastly, you'd want to ensure that the company you're investing in has high growth potential. You see, what makes the stock market so lucrative is that stocks grow over time. And so, a company that experiences significant growth in the next few years will surely bring in great profits or dividends for its investors. Now you know all you need to know about dividend investing. All that's left is for you to have the right mindset and take action. Investment is all about taking a calculated risk. If you wish to reap high returns, you must invest a reasonably high amount of money. If you have an investor mindset but don't know what assets are worth putting your money in, don't worry. We've gathered some of the best monthly dividend stocks out there. We'll show you how much you need to invest to earn $1,000 monthly as dividends. Number 1. Realty income. This company deals with real estate and has a dividend yield of 5%. This company is what you'd call an REIT, short for Real Estate Investment Trust. But unlike most REITs, it focuses on paying out monthly dividend stocks to investors. So much so it was nicknamed the Monthly Dividend Company. A brief look into the company's history shows that they've consistently paid out over 600 monthly dividends to investors, and their dividends have a compound annual growth of 4.5%. But beyond all that, realty income is still acquiring properties to expand its portfolio. In 2021, they acquired VEREIT, another real estate company with $6 billion worth of properties. If this trend continues, you can be sure as an investor that your dividends will grow massively over time. Number 2, Stag Industrial. Stag Industrial is also an REIT. A company focuses on assets like warehouses and industrial facilities. Just so you know, these type of assets are always in high demand because of e-commerce and industrial manufacturing activities. Companies need warehouses for storage, just as they need production facilities. This is why Stag, so far, has sustained a consistent stream of income. In fact, over the years, the company has increased its dividend payouts thanks to its acquisition of over 400 new properties. Currently, Stag has a dividend yield of 4.09%. And just so you know, the company is in good shape and doesn't look like it will be out of business anytime too soon. Their unique kind of real estate also ensures constant cash supplies since the assets they invest are in high demand. Number 3, Oxford Square Capital Corporation. This company is a business development company that has a dividend yield of 13.5%. One thing that makes this company stand out is that it doesn't focus on one sector, but seeks out profitable investments in any sector. The company seeks out establishments that aren't too small or too big and have the potential to become great in the near future. Once Oxford Square Capital Corporation spots these properties, it buys into them, partially or totally. If you think all of this is quite risky, you needn't worry. You see, the one golden rule of investing is in diversifying a portfolio. This company does it perfectly. The strategy has worked for them all these years, and Oxford Square Capital Corporation has a growth grade score of A. The dividends from the company's stock have grown by 15% in the past year alone. So certainly, there's no doubt this company will be a good option for dividend investing. Number 4, Orchid Island Capital Incorporated, ORC. Orchid Island is an REIT company with a dividend yield of 18.6%. The company specializes in residential mortgages-backed securities, also called RMBs. In other words, they invest in residential apartments with mortgages. Their profits come from interest rates made up on residential mortgages. Being a real estate investment trust, the company distributes up to 90% of its profits among its investors. One thing about this company, however, is its dividend yield has always increased yearly. Plus, they've never failed to pay out monthly dividends to investors. ORC is a good option if you need an REIT that offers a high return on investment and consistent monthly payments. Number 5, Armor Residential REIT, ARR. Armor Residential REIT has an annual dividend yield of about 19%. The company, just like ORC, specializes in residential mortgages. They invest in diverse kinds of individual homes, making money off interest rates. As of June 2023, Armor Residential REIT has a net income of $42.9 million, with a dividend of $1.1 per share. Just like other companies on this list, ARR pays out its dividends at the end of every month. Buying these companies' shares will certainly prove to be a very rewarding both for short-term and long-term investments. Number 6, San Juan Basin Royalty Trust, SJT. The SJT has an impressive dividend yield of 22%. And unlike the other companies on this list, it invests in the energy sector. To be precise, the company invests in underground oil and gas reserves. You'd agree that right now, fossil fuels are the order of the day. Seeing how the SJT is actively involved in extracting and selling oil and gas, you can imagine how lucrative it would be to be part of this company. Oil and gas prices have been surging recently. While this means problems for the masses, it equally means more money for investors like you. The only downside with this kind of investment is that your profits and dividends will only last until the reserves run dry. That is why the San Juan Royalty Trust is termed a depletion trust. However, there is no problem if you only seek to make good money for the short term. Now you know the 6 best options for dividend investing. Let's see how you can earn at least $2,500 a month on dividends. To achieve this, we'll take a look at the three companies with the highest annual returns: ORC, ARR, and SJT. These stocks have 18.6%, 19%, and 22% returns respectively. Let's find the average returns of these three stocks. 18.6% plus 19% plus 22% divided by 3 equals 19.8%. Since our target is $2,500 a month, which equates to $30,000 a year, we need to figure out how much to invest to achieve this annual return. Using the average return of 19.8%, we can find the required investment amount by dividing our desired annual return by the average percentage return. $30,000 divided by 19.8% is $151,515 approximately. So, to get a dividend return of $2,500 per month, you have to invest approximately $151,515 in these three companies. Remember, this is a simplified example. An actual investment may vary based on market conditions, fees, taxes, and other factors. Always consult with a financial professional and do your research before investing.